You are watching special series on Commodity Masterclass, an initiative by ICICI Securities, and I have a very special guest with me today to talk on commodity markets. What are commodity markets? How can you hedge and invest and trade in commodities? To explain all this, I have a very special guest, Mr. Ramesh Varakhedkar, Head Commodities and Currencies at ICICI Securities. Very good afternoon, Mr. Ramesh. Hope you are doing good.
Yeah, thanks.
Ramesh, talking about commodity markets, world over the markets are nearly 10 times the equity markets, but in India, it's still in a very novice stage. How would we develop these markets? How can a retail investor really come to these markets and start trading and understanding these commodity markets?
Yeah, Gitu. Yeah, as you rightly said, worldwide commodity markets are pretty large, but in India, they also started late. They started in 2002, 2003, and there were some challenges in 2013. So market hasn't grown. 2013, the average volume used to be a lakh crore per day, but post CDT, it became 1/4 or 1/5 of those markets. But after SEBI taking over in 2015, there has been a lot of developments which have happened, like commodity options has come in, mutual funds have been allowed to participate in these markets, AIF category are allowed to participate in these markets. So the markets are increasing now, the volumes are going up, and it's been growing for the last 2 years. And with all these changes, we believe Indian commodity market should also become like at least comparable to the world commodity markets. So even if at all you look at our derivative markets, in India, the commodity derivative market is hardly 3.3% of the entire derivative market. So there's a lot of opportunity, a lot of scope to improve from here. And I'm sure with the SEBI taking over and all these changes happening, it's going to happen in India too.
What are commodity derivatives? How can one trade in these derivatives?
Yeah. Basically, commodity derivatives are financial derivatives, right? So like how you have your equity derivative where your underlying can be a stock or an index. Similarly, in currencies, it's currency pairs which are the underlying, and they are the futures and options contracts which are traded. Similarly, in commodity derivatives, you have an underlying which can be gold or a silver, crude oil, so on and so forth. And there's a derived price which is there, which is futures and options, which is traded on the exchange platform. In India, there are 5 exchanges now which are offering commodity derivatives. So we have MCX, which has got a market share of almost 95%, followed by NCDX, where predominantly agri commodities are traded. You have ICEX, then 2018 onwards, NSE, BSE also have been allowed to trade in commodities. So you have 5 exchanges on India. So these are commodity derivatives. So a retail participant can onboard with a broker like ICICI Direct, and then he can start trading in commodity derivatives. So coming to participants, who all can participate? It can be an individual investor, it can be a hedger, or it can be a financial institution. Anybody can participate on this particular platform.
Like in equities, we have margins to be kept with the exchange so that you have an exposure to that commodity. Does the same apply to the commodity market also? Do we have to keep some kind of a margin to really trade in commodity markets?
Yeah, as it is under SEBI, and commodity derivatives or commodity markets also work in the similar way how equity derivatives work. So only difference is here the timings are pretty long. Markets start at 9 o'clock in the morning and go until 11:55 in the late night. So margins are the same, but margins are a little lesser compared to the equities market. Today, the gold margin requirement is approximately 10%. So these are all leveraged products which are there. So a client or an individual or an institution or a hedger, any of those jewelers, can place a margin of only 10% and trade for the value of that particular commodity.
What is the difference between the spot price and the derivative future? Because in derivatives, we have contracts for several months, but in spot, we have the spot price also. So a retail investor does not know. He says that spot price is this, but why are we taking 3 contract months? Why?
Okay. Spot market is the market where there are buyers and sellers, right? There is no intermediary which is there, so they can get into a contract. So it's nothing but it's an over-the-counter transaction which happens. But when it comes to currency derivatives on the exchange, there is an exchange in between, and all the transactions are guaranteed, right? And the biggest advantage is on the exchange you have 1, 2, 3 farm-month contracts also. So I know that markets are going to be volatile, and a corporate or somebody has to hedge their exposure. for a second month or a third month. So depending upon they can give the premium and they'll be able to hedge on those commodities. So spot market is the transaction for that particular time between two parties, which is not guaranteed. Whereas exchange, you can take your hedging positions for months.
Can we take deliveries also in commodity markets?
Yes, deliveries are also allowed except for crude oil and natural gas. But there's a process which is there. One needs to have a separate account for deliveries and they need to open and then the deliveries can be done for all the products except for crude oil and natural gas, which are cash settled products.
Mr. Ramesh, if I'm a fresher in the commodity market and I really want to get and trade and invest in commodities, how do I go about it? Because there are so many brokerages who are offering services. So how to select the right brokerage and how to approach and start trading in commodities?
Now, post SEBI taking over, it's only one entity. Earlier, when FMC and SEBI were different entities for commodities and equities, a client had to go and register with both the entities, or the broker had to have two different entities. But post 2015, it's only one entity which is offering all the segment, which is equities, commodities, and currencies. So if somebody is fresh, somebody is new and wants to start trading in commodities, he or she can go to the open an account with any of the broker like ICICI Direct and accept the terms and conditions for commodities, allocate, and then they'll be able to start trading. And for those customers who have been existing customers who have been trading on equities and currencies, they can just do the terms and conditions acceptance and they'll be able to start and trade. So it's pretty simple now after unification of both the regulators, which is FMC and SEBI.
What are the do's and don'ts that you would suggest the first-time investor actually, who comes into the commodity derivative markets?
First thing is, I believe one should understand the commodity, what he or she is going to trade into. And predominantly gold and silver is many of the customers track, but there are also commodities like aluminum, copper, lead, nickel, zinc. So one should understand what the commodity is, what is the lot size, how the contract is, when is the expiry, right? And what is the leverage, margin. So these are the things that one should understand. The first thing is understanding about the commodity. And the second thing is, for trading into commodities, unlike equities where one has to see the company, the balance sheet, the promoters, there are many things that one has to see in commodities, right? Because it can be geopolitical situation, right? Or it can be demand, supply, the stocks in the warehouse, so on and so forth. And when it is international commodities, one more angle which comes into picture is the USD INR price, because all these international commodities are traded internationally, and when the price is quoted in India, USD INR also plays a big role in that. So there are multiple things that one has to learn, understand before getting into commodities. And every individual is different, right? They have to take a position as per their risk appetite. And on don'ts, these are all leverage products. As I said, the margins are very less in commodities, so it can be a double-edged sword when it comes to risk and reward. So these are the things that one has to look into before starting trading into commodities.
As you said, Mr. Ramesh, that all the commodities mainly are denominated in dollars, and so we have to take into account the currency risk factor also. So can we hedge currencies too?
Yeah, currencies also can be hedged. Now, currencies also there on the exchange platform. So one can hedge currency on the banking platform by doing a forward or an option. Similarly, there's a futures and options on the exchanges where they can also hedge currency risk with a broker.
Can a retail investor do so?
It's also open to retail investor. A retail investor can, like how he can invest and participate in commodity markets, he can also do it in currencies.
And can the retail investor take exposure in all the commodities? How many commodities are being traded on the exchanges? If I have that number with me.
Yeah, if at all you look at, you have bullion. In bullion, you have gold and silver, which is traded. Again, there are different lot sizes and sizes which are there, like gold 1 kg, gold 100 grams, gold petal, gold mini, so on and so forth, which are traded. So in bullion, you have gold and silver. Then you have base metals, where you have copper, aluminum, lead, nickel, and zinc, which are traded. Then you have energy products, which is crude oil and natural gas. Then you have agri products, where all agri products are. So you can make basket of 4, which is bullion, energy, base metals, and agri products.
Thank you, Mr. Ramesh, for speaking with us today. It was a pleasure speaking with you. With this, we come to an end for the first episode of Commodity Masterclass with ICICI Securities. We'll continue giving you more information, more information be shared on how to trade derivatives, what to take into consideration when metals, with exposure to metals, with exposure to currencies, much more to come. Keep watching this space.